In the daily financial news cycle, one might read that the market is nervous, Wall Street is cheering, or the market punished the sector. These humanized descriptions attribute emotions, reactions, and even motivations to what is, at its core, a complex system of transactions and expectations. But is it accurate or helpful to discuss the market as if it were a person? And with the growing role of algorithmic trading, does the market even have a mind of its own anymore? A market that feels, journalists, investors, and analysts regularly anthropomorphize the stock market. When the Federal Reserve hints at raising interest rates, headlines often imply that the market panicked. If a tech company surpasses earnings expectations, it is said that the market celebrated. This linguistic framing creates the impression that the stock market possesses a coherent consciousness that reacts to external stimuli much like a human would. This metaphorical treatment, however, serves as a shorthand for the collective reactions of numerous human and algorithmic actors. Behavioral finance research demonstrates that investor psychology frequently plays a significant role in market movements. For instance, widespread fear may lead to panic selling during market downturns, worsening losses. Conversely, optimism can elevate prices well beyond fundamental valuations during bull runs, creating bubbles. How much of the market is human? Despite the psychological framing, many stock trades are not executed by humans at all. Recent estimates indicate that 60 to 80% of U.S. equity trades are generated through algorithmic or high-frequency trading, HFT systems Oyenia and Ugochukwu 2024. These systems utilize large-scale data, predictive models, and lightning-fast execution to identify and capitalize on arbitrage opportunities. These algorithms can respond to earnings reports, news headlines, and macroeconomic indicators in milliseconds, much faster than any human could react. Paradoxically, while these systems aim to strip away emotion, they may unintentionally amplify it. Some studies suggest that the behavior of algorithms can trigger emotional responses in human traders, contributing to feedback loops of volatility. Interestingly, some algorithms are designed to detect market sentiment or public mood and trade accordingly. One study explored systems that employ natural language processing to interpret investor mood and incorporate it into trading logic. Does the market have a personality? So does the market have a personality? From a technical standpoint, no. The market lacks consciousness, self-awareness, or intent. However, it does exhibit emergent behaviors that appear personal. These behaviors arise from the aggregation of human cognitive biases, institutional decision-making, and algorithmic feedback. Scholars have described these emergent patterns as mesoscale psychological dynamics. On this middle ground, neither individual psychology nor macroeconomic indicators alone can explain behavior. This lends some credence to the idea that what we perceive as market mood may be a real, albeit emergent, phenomenon. Furthermore, the symbolic language of market anthropomorphism may fulfill a social or psychological purpose. It simplifies complexity and offers a narrative framework for investors and the public to understand chaos. 3 psychological guides for investors. 1. Recognize your biases. Emotions like fear and greed often drive poor decisions. Learn to identify your patterns. 2. Understand the machines. With so many trades executed by algorithms, human intuition alone is no longer enough. 3. Think long-term. The market's short-term moods are noisy. Focus on fundamentals and time horizons. Conclusion: the market mirror. Ultimately, the stock market is less a rational machine or emotional entity and more a mirror of our collective psyche, amplified by algorithms. Though it doesn't feel, we describe it as if it does because we need to make sense of its chaos. By understanding both the psychology behind our decisions In the automation driving the trades, we become wiser participants in the system that we so often humanize.